They said it would never happen. No chance for spot altcoin exchange-traded funds in the United States. Yet here we stand on the brink of a massive shift, where even the most cautious industry insiders are whispering that the Securities and Exchange Commission might finally grant a green light to a product many thought was dead in the water. What is causing all the commotion? And could this be the dawn of a whole new era for everyone holding their breath in the digital asset space? Today, we will peel back the curtain on this high-stakes drama, digging deep into why major altcoins like XRP, Solana, and Cardano might soon be strutting across the investment stage in a glimmering exchange-traded fund wrapper. At the very center of this saga is the Grayscale Digital Large Cap Fund, a trust that boasts a carefully blended roster of Bitcoin, Ethereum, XRP, Solana, and Cardano. Grayscale has announced a bold intention to convert that very trust into a fully regulated and exchange-listed exchange-traded fund. No big deal, right? Wrong. That single move would mark the first time the Securities and Exchange Commission blesses a United States product that provides exposure to these specific altcoins within the comfort of an exchange-traded fund. For those who have been told over and over again that regulatory approval for altcoins is a pipe dream, this is a jolt of electricity that no one can ignore. But why the newfound optimism? After all, we have heard regulators reference consumer protection, market integrity, and an alphabet soup of other concerns whenever the term spot altcoin exchange-traded fund is uttered. Nate Gerasi, president of the ETF store, has been one of the most vocal champions proclaiming there is a high likelihood of seeing a green light for Grayscale's conversion. He points to the flurry of engagement between Grayscale and the Securities and Exchange Commission, including the timely filing of an amended S-3 form that was stamped just a few days before. For him, and for countless observers, this signals an unmistakable seriousness on the part of regulators, as if the tide is finally turning in a more receptive direction. We also have to acknowledge a particular quirk in existing regulations. There is a known allowance for as much as 15% of an exchange-traded fund's total holdings to remain in private assets. Some have gotten creative with that leeway in the past, contorting fund strategies to inch beyond the limit in not-so-subtle ways. But the unique composition of the Grayscale Digital Large Cap Fund, or GDLC as it is often called, showcases that the combined share of XRP, Solana, and Cardano is less than 10% of the entire portfolio. Even if the Securities and Exchange Commission insists on playing it safe, it might see no compelling reason to strike those assets out completely. That would force inconsistent standards compared to other funds launched under the Securities Act of 1933, and the Commission is likely aware of how that might look in the bigger regulatory picture. Why does it matter if altcoins are part of this basket? Could not Grayscale just convert a Bitcoin-only fund and call it a day? That strategy might have been simpler, but the power in this potential approval lies in its being a test run of sorts. If the Commission can confidently watch a multi-asset crypto product function smoothly, with minimal risk, it may be more inclined to expand that openness toward additional digital assets down the line. Imagine that scenario, a slow but steady step into broader acceptance, culminating in the official sanctioning of standalone spot exchange-traded funds for XRP, Solana, and Cardano. If that does not stir excitement among crypto enthusiasts, what would? Gerasi's perspective is that the Securities and Exchange Commission wants to ease into this territory carefully. Rather than leaping headfirst into a torrent of altcoins, it may prefer to carefully test the waters with just a fraction of a portfolio. By granting the Grayscale Digital Large Cap Fund the special pass, the Commission will have a living laboratory to see if such structures introduce any dangerous wrinkles in market stability. If, over time, it sees that everything remains on the up and up, then we might witness individual spot offerings for these altcoins. Suddenly, the domino effect becomes very real. What starts with a relatively small corner of the industry might lead to a chain reaction, sending major investment firms racing to roll out their own specialized altcoin exchange-traded funds. But we cannot forget the backdrop of a changing regulatory and political environment. Perhaps the biggest wildcard in this entire conversation is none other than President Donald Trump, who, for one reason or another, has found himself in the middle of the crypto conversation. While some folks once pigeonholed him as an opponent of digital assets, a wave of recent developments has cast him in a far more supportive light. Now that certain businesses connected to his brand have begun filing for their own cryptocurrency exchange-traded funds, one cannot help but wonder if this has had any trickle-down effect on broader sentiment. After all, if the president endorses the principle that crypto investments can be legitimate, it becomes extremely challenging for regulators to brush them aside. Consider that well-known asset managers, emboldened by what they perceive as growing acceptance in political corridors, have been submitting an avalanche of applications to the Securities and Exchange Commission since the early months of 2025. Among these are big names like WisdomTree, 21 Shares, and VanEck, each with proposals for direct exposure to altcoins such as XRP, Solana, and Cardano. The fact that these once fringe assets are now being seriously considered by mainstream fund managers underscores a transformation that no one, not even die-hard crypto skeptics, can easily ignore. The pattern is shaping up. Potential altcoin products might be the next big thing, so long as the Securities and Exchange Commission is willing to open the door. From the vantage point of investors, the rewards could be vast. For years, the only easy way to gain exposure to altcoins in a traditional brokerage account was to buy shares in trust structures that sometimes traded at hefty discounts or premiums relative to the asset's actual worth. With a fully fledged exchange-traded fund, you typically get more transparent pricing and potentially lower management fees, plus the comfort of a well-known exchange listing. Add to that the possibility that large institutions, from pension funds to family offices, might gain the confidence to allocate to altcoins once the regulatory stamp of approval is in place, and it becomes easy to see why this conversation is so electric. By the way, if this story is sparking your curiosity and you love hearing about market-shifting events, feel free to tap that like button right now. It is one small gesture, but it means a lot to keep us sailing through the stormy seas of crypto. What about the potential pitfalls? The Securities and Exchange Commission did not get its watchdog reputation by handing out approvals readily. One false move, and retail investors might be left holding the bag while unscrupulous operators race away with their pockets full. The identity of XRP, Solana, and Cardano as either fully compliant digital commodities or potential unregistered securities has ignited debates in the past, and critics of the entire altcoin realm will pounce on any vulnerability. If the Grayscale Digital Large Cap Fund does morph into a listed exchange-traded fund, and something goes sideways, the backlash against all altcoin projects might be fierce. Yet that does not seem to be cooling the optimism, which is unusual in a space that is usually quick to spook. In parallel, institutional demand for digital assets, particularly Bitcoin, has been roaring back with a vengeance. Over the past several weeks, data from SoSo Value shows that inflows into spot Bitcoin exchange-traded funds soared to more than $2.2 billion, pushing the overall total near $50 billion. That number alone should shed some light on just how massive the appetite for crypto-based products has become. If altcoins follow that trajectory, we could see an explosive run where numerous altcoin exchange-traded funds each capture hundreds of millions, or even billions in a short span of time. This mania for fresh financial instruments might eventually reach smaller altcoins as well, riding the wave of official acceptance like travelers on a thrilling roller coaster. Do not forget that Grayscale itself has not put its ambitions into just one basket. The firm has filed separate proposals to transform its XRP Trust and its Solana Trust into spot exchange-traded funds, a move that would have been ridiculed as delusional around 2 or 3 years ago. The fact that these proposals did not sink instantly, but are now under formal review, suggests the regulatory environment is evolving. The Securities and Exchange Commission's acknowledgement of the Solana proposal in February was deemed a baby step by Eric Balchunas, a Bloomberg analyst, but a baby step that was surprisingly significant. For the first time, watchers could see a faint path forward for altcoins, not just the big guys like Bitcoin and Ethereum. One intriguing twist is the question of whether regulators might see altcoin exchange-traded funds as actually less risky in some respects compared to certain existing unregulated channels. If a spot-speaking altcoin exchange-traded fund must comply with extensive disclosure, custody, and compliance rules, it might reduce the risk of shady activities. Within an exchange-traded fund, the underlying assets would be held by a qualified custodian, returns reported in a consistent manner, and consumer protections placed front and center. For critics who say altcoins are the Wild West, this might be the remedy that brings some order to the chaos. If that is not a sign of the mainstreaming of digital assets, it is hard to imagine what would be. But let's not fool ourselves. The storm clouds always loom in any regulatory story. The Securities and Exchange Commission could still balk, choosing to drag its feet or issue more rejections while it navigates the complex intersection of consumer protection, financial stability, and global competition. It also remains to be seen how macroeconomic factors might affect the timing. If a global recession or a major financial crisis flares up, regulators might slam the brakes on anything perceived as too speculative. That said, the crypto ecosystem has proven resilient, bouncing back from each blow stronger than before. Maybe that resilience is exactly what will tip the scales in its favor. This entire conversation paints a larger picture that goes beyond the question of altcoin exchange-traded funds. It speaks to the unstoppable momentum of digital assets as a new frontier in finance. Every time a big player steps into the ring, from major corporations to global institutional investors, the lines on the playing field shift just a little bit more. With the potential for mainstream altcoin exchange-traded funds, we might soon witness massive capital inflows that not only boost coin prices but also pave the way for innovative products and services that were once deemed too risky to touch. In that spirit, it is likely that many observers are not so much watching the day-to-day movements of this Grayscale filing as they are scanning the horizon. Could we see a wave of altcoin acceptance that topples old assumptions about what the Securities and Exchange Commission will or will not allow? Could token projects once relegated to the outskirts of the crypto map find themselves neatly packaged in retirement portfolios worldwide? These are not idle questions. They point to a future in which digital assets blend seamlessly into traditional finance, possibly overshadowing even the initial mania that surrounded Bitcoin when it was the only name on everyone's lips. Industry veterans are quick to remind us that not all altcoins are created equal. The ones in Grayscale's digital large cap fund have track records, robust communities, and recognized networks. But one cannot ignore the thousands of other projects attempting to rise through the ranks. Might the success of funds like GDLC inspire attempts to include emerging altcoins with smaller market capitalizations? Or will the Securities and Exchange Commission adopt a stance that fosters only the big names while pushing lesser-known projects into the shadows? Whatever the result, you can bet that market observers will watch every turn of the regulatory gears with rapt attention. In this swirl of speculation, we also have a fascinating wildcard in Trump media's move to file for a spot Bitcoin and Ethereum exchange-traded fund, partnering with Crypto.com as custodian. Regardless of anyone's political leanings, the fact that such a high-profile brand is dipping its toes into the realm of crypto-based financial products signals a cultural shift of epic proportions. If you are caught up in the suspense of it all, now might be a great time to subscribe. That way, you will not miss any fresh updates as we track the next big twists and reveals coming down the pipeline from lawmakers, regulators, and the ever-evolving market itself. Grayscale does not want to walk this path alone. Its business hinges on being at the forefront of crypto innovation, and the company knows full well that if it can crack open the altcoin exchange-traded fund market, a windfall of investor interest may follow. This is about more than just profit, though. It also sets a precedent. If one major crypto asset manager can show the regulator that it can manage a basket of digital currencies without meltdown or catastrophe, the concept of altcoin investing might suddenly look less daunting to risk-averse traders and institutions. Yet skeptics remain. Many continue to argue that altcoins, as a broad category, harbor vulnerabilities, whether related to the centralization of development teams, the concentration of token holdings in a few wallets, or lingering legal uncertainties about whether a coin should be defined as a security. The bigger question is whether the Securities and Exchange Commission, in giving the stamp of approval to a carefully curated portfolio, is tacitly endorsing the underlying legitimacy of each included altcoin. We can already picture the debate raging among regulators, lawmakers, and market experts. Should the commission be the arbiter of which altcoins are safe? Or should its job stop at ensuring robust structures are in place so consumers are not misled or exploited? That is why Geraci's assertion of a high likelihood of approval is so remarkable. Ever since the earliest applications for a Bitcoin exchange-traded fund landed on the Commission's desk, we have witnessed a pattern of rejections and foot-dragging. Each time, the official rationale hinged on concerns about market manipulation or insufficient oversight. Now, apparently, we are in a new era of dialogue, with the Commission at least willing to reciprocate some applicant efforts by attending to carefully revised documents. A single approval could represent the crack in the dam that eventually lets the altcoin waters gush through. The future of XRP, Solana, and Cardano in licensed investment products is just the tip of the iceberg. We are eyeing a deeper phenomenon, the blending of the old guard financial structures with the new school digital revolution. The buzz around altcoin exchange-traded funds might encourage developers to double down on building better ecosystems, forging alliances, and improving their technologies to be worthy of mainstream attention. Meanwhile, the wave of institutional capital that could pour in if a major altcoin exchange-traded fund is approved might accelerate real-world adoption faster than in any previous bull cycle. If you pause to think about it, the journey from crypto's humble beginnings to this moment is nearly unbelievable. Only a decade and a half ago, the concept of digital currency was relegated to niche online forums and whispered about in tech-savvy corners. Now, the biggest players in finance, from multi-billion-dollar institutions to venerable regulatory bodies, are hashing out the specifics of launching complex financial products that revolve around tokens, once deemed too fringe to mention. The new wave of altcoin exchange-traded funds might be the next milestone in a story that has already defied countless critics and skeptics. Of course, a victory for altcoin exchange-traded funds does not mean the road ahead will be free of bumps. Lawsuits, controversies, and the occasional cryptocurrency meltdown could still cloud the path. But if the Securities and Exchange Commission is truly on the verge of approving a diversified digital asset fund, we may look back on this moment as a turning point. It could be the catalyst that allows altcoins to stand on equal footing with Bitcoin and Ethereum in the eyes of the mainstream investing public. And once that door is open, there may be no closing it. In the days or weeks that follow, expect the rumor mill to spin fast. Every passing hour might bring a new headline, intense speculation over the exact timeline, bigger banks hinting at their own altcoin ventures, or fresh commentary from influential political figures who see the potential of digital assets to reshape our financial future. This drama is far from over. In fact, it is only getting started. If you have made it this far, I hope you are as intrigued as I am about the historic dance between cautious regulators and a crypto industry bursting with ambition. We are witnessing a seismic shakeup, and the ultimate outcome could redefine how the world invests. So, buckle up, keep your eyes glued to the horizon, and brace yourself for announcements that might come sooner than we think. This is not just another round of hype. This is the beginning of a new chapter, one in which altcoins could legitimately claim their place in portfolios around the globe, underwritten by the very regulatory body once viewed as the biggest roadblock. Will Grayscale succeed? Will the Securities and Exchange Commission push back at the final hour? Or will an entirely different player steal the limelight by first winning the race for an altcoin exchange-traded fund? The answers to these questions will shape the crypto narrative for years, if not decades, to come. One way or another, the story we have just explored is a testament to how quickly fortunes and regulations can change in the crypto world. A single ruling here, a solitary green light there, and the entire playing field shifts in an instant. That is part of why so many are enthralled by digital assets. They embody a speed of innovation that few other sectors can match, even as they remain at the mercy of policymakers and financial gatekeepers. The fact that experts are now optimistic about an approval that was once deemed impossible should inspire everyone to keep a close watch on what happens next. If I can leave you with any parting thought, let it be this. In the rapidly mutating realm of crypto, the unthinkable becomes reality at dizzying speed. So prepare for plenty of surprises.